Okay. Okay, so welcome to this module where we're going to be talking about the introduction to candlesticks. Okay, and in this section, you're going to be learning how to read candlesticks like a pro. Now, if you're conversant with your market structure, people will be like, how markets be now? If you're a crypto trader, now that you've decided to start trading cryptocurrency, people would always ask you how markets be now. What's the state of the market like? Okay, so in order for you to be able to explain to them the state of the market, one of the foundational knowledge you need to have is the candlesticks. It's just like those of us that are, all of us, in fact, everybody that's watching this thing now must have gone through primary and secondary school. Okay, you'd agree with me that if you had gotten to university, beautiful, you'd agree with me that all what you're learning in the university wouldn't have been possible if you didn't learn about your alphabet or your 20th alphabet in your primary school or your nursery school, rather. Okay, so in order for you to be able to become a proficient trader, some of the foundational knowledge you need to have is the knowledge of your candlesticks. Okay, and then this section. In this section, I'm going to be explaining to you guys how you can read this, how you can read these candlesticks like a pro. Okay, now this would now form the basis for which you can properly function in the crypto market. So without wasting so much time, let's get into the course proper. So what are candlesticks, right? So candlestick refers to the pictorial illustrations of price volatility of a particular crypto within a given time frame. Okay, remember I said what the market moves up and down, like the market is full of volatility. That is why if you go on your chart, you discover that it's as if the market is breathing, as if the market is a living organism. Because what every minute the market is moving, the market is moving, the market is moving. Today you see that BTC is pumping, BTC is dumping. How do you know that this BTC is pumping or BTC is dumping? It's what it is described on the candlesticks. Okay, so the moment you look at the candlestick, you should be able to say, okay, this is what the market is doing at this particular period of time. Nobody can conduct any analysis without first of all observing or studying the structures of the candlestick. That is why it is very, very important you pay attention to this particular section. Okay, it is the most useful component of a successful crypto trading career. Like I said, like I gave an illustration with the alphabet. Nobody today, I wouldn't be able to do what I'm doing today if I hadn't learned my alphabet. So in as much as nobody is paying you today or nobody is rewarding me today because of I know my alphabet, some of the things or everything I'm being able to do today is because I've learned the alphabet. Okay, so tomorrow now, if you become a proficient analyst, it's not because of your nobody's going to pay you for knowing about candlesticks, right? People are going to pay you because of the knowledge you're going to use the candlestick, because of the application of, because of how you're going to apply the knowledge of these candlesticks, right? So just pay attention to this particular section and see how you can develop mastery or understand the psychology behind these candlesticks. Okay, so let's go on to the next slide. Okay, and of course, like I said, it refers the it refers to the it refers to the pictorial illustrations of the price volatility of a particular crypto asset within a given time frame. Like I said, if you go on your trade view now, you can actually change the structure of your chart to different time frames. We have the 1 week time frame, we have the daily time frame, we have the weekly, we have a lot of time frame, even the 1 second time frame, the 15-minute time frame. Right. So each of these time frames have they have their own various candlesticks. Okay, so that's what I'm saying now. So the candlesticks are not fixed. Okay, don't say don't just look at the candlestick and assume that it says the same thing. No, it is dependent on the time frame for which that particular candlestick is it's being presented to you at. So if a 4 hours candlestick is different from a 1 hour candlestick, is also different from a 30-minute or a 15-minute candlesticks. Okay, so having an understanding of how this candlestick work is going to help you know how to better take good decision based on your candlesticks. Okay, so now what is an anatomy of the candlesticks? Okay, by anatomy, we mean the parts of a candlestick. Okay, just as you can see there now, these are basically the 2 types of candlesticks we have. Okay, and then the anatomy, which are the parts, include the body, the wick, the open, the close, the high, and the low. Okay, now just as the name implies, the candle. Just imagine that white candle used to light up your house when there's no light. Okay, they agree with me that fat place is what we call the body. It's the same thing with this particular one too. You can see it. So in this particular case now, the visible red or the visible green part of a candle is what we call the body. Okay, so when you hear me say the body of a candlestick is the visible part of the candlestick you can see. Okay, and of course it is the body of the candlestick that tells you which candle or which type of candle that is being formed. So if the body of the candle is red, then you know that okay, this is this type of candle. If it is green, you know that okay, it's the other type of candle. Okay. Now, what is the wick of the candlestick? Okay, now you can see how the wick, just like we have in the normal candle, it has a rope. Okay, that rope is what we call the wick of the candle. Okay, don't worry. As we progress, you're going to understand the usefulness of this wick of a candle. Okay, just that for the chart, the candlesticks on the chart, the wicks can come out in both sides. Of course, the candle is at home. The wicks is most likely on just one side. Okay, except maybe you want to go and scrape the bottom before you see the wick at the bottom side. But then the candlesticks on the chart have most times have two wicks, one at the top and one at the below. Right now, we have the next thing, which is what? Which is the open. Okay, remember I said this candlestick, they form. Okay, so what is the open? And the open is that particular price at which the candlestick forms. Okay, just look at the chart I have here. You can see that now these two candles, now they are the same. Okay, they are all candlesticks. Okay, but then they are different kind of candlesticks. I'm going to explain them as we progress, but then just try and see how where you see where I label the open, the close. You can see the label in there. Along the line, I'm going to explain to you each of these things, right? So now, what is the open? Now the open is that particular price at which the formation of that particular candle starts. And every candle forms. Remember, I said every candle is represented, or every candle represents the price volatility within a specific time frame. So let's say that particular time is 4 o'clock. Within at that 4 o'clock, what time did the candle start forming? That period or that price at which the candle start forming is what we mean by the word, by the open. We all go to school here. That time that school open is what we mean by what, you know, a school. There's only what an opening time and a closing time. So the opening time is when the candle begins formation. So likewise, the close. Then the close is when the candle stops formation. Let's say maybe we're in the 30-minute time frame, and then the candle, maybe we're in 1:30, right? We say it's a 30-minute candle. So the moment is 1:30, a new candle begins to form. That's at 1:31, a new candle begins to form. So that particular price that the candle begins to form is the open. Then at exactly 2 o'clock, that candle closes. The formation of that particular candle closes. Don't worry, along the line, you're going to understand what I'm trying to explain here. Okay, so the beginning of a candle is what we call the open, and at the price at which the candle stops formation is what we call the close. All right, you can see it there. Now, what is the high now? That is the next anatomy of the candlestick now. Okay, now the high refers to that period or that price value, that the highest point at which the price value was at which the price volatility was able to get to within a specific time frame. Okay, don't worry, along the line you're going to see practical illustrations of this, and they are not so much complex. Okay, just follow me, right? Like I said, the high refers to the highest peak at which price volatility was able to get to at a particular time frame. Okay, then the low is the same thing. The low is just the opposite. Okay, the low is the lowest point at which price volatility was able to get to at a particular time frame, right? So these are just the anatomy of a candlestick. Okay, as you progress, you're going to have better clarity on how to use your candlesticks. So let's go now. Types of candlesticks. Okay, we basically have two types of candlesticks, right? We have the bullish candlesticks and the bearish candlesticks. Okay, now what is a bullish candlesticks now? For example, is most at times represented by the green color. Although people customize their own candlesticks to the color that they want. For example, my own candlesticks are white and black, so they are not red and green. They are white and black. But then because I've understood the psychology behind these candlesticks, I'm not confused. Right, so along the line you can also understand. So even if somebody shares a candlesticks or a chart pattern or a chart that has different colors, you should be able to decipher or decode the anatomy of or the formation of these candlesticks. Okay, so like I said, we have the bullish and the bearish candlestick. Okay, now what is the bullish candlesticks? The bullish candlesticks are candlesticks that represent an increase in or a pump. Let me use the word that we understand better. It's a candlestick that represents a pump. So whenever a market is pumping or whenever a market is ascending or going upward, it is always represented by a bullish candle. The thing is going upward. Okay, now the opposite for a bearish candle. A bearish candle shows you when a price is dropping. Okay, so you can see let's do an illustration with what we have on the screen here. Okay, so you can see the first one, which is the bullish candlestick. Remember I said the bullish candlestick is when the market is advancing, when the price volatility is advancing. Okay, so let's assume that this is a 30-minute time frame candlestick. Okay, you can see that the open of the candlestick, now we're talking about this green candlesticks now. Okay, this green candlestick now, the open of the candlestick is at $46. Case study. At $46. Then the moment the price opened at $46, the price began to go at that particular time frame. The price began to go low, and it went to as low as $41. Remember, the price opened at At 46. I said, what is an open? An open is that particular price that the formation of a candlestick begins. Okay. So let's say that this was the 30-minute time frame, right? And then the candle opened at $46. Then price volatility, instead of price volatility to start going up, price volatility began to go down first. It was going down, and still within that 30-minute time frame, the price was able to get to as low as $41. Now, the moment it touched $41, meaning that was the lowest point at which the volatility was able to go to at that 30-minute time frame. Then before you know, the price now would reverse and start going upward. You can see now that as the price from $41, the price began to go up, go up, go up, and then it even surpassed the $46 at which the price began. So the price begin to advance. You can see how the formation is now. The price begin to advance. That is why it's called a bullish. It is showing what market is pumping, market is advancing. So the market began to advance, and then the market advanced to as high as $54. So you can see how I'm trying to explain the anatomy of the candlesticks now. Okay, so the market, as it was going within that particular time frame, the market was able to advance to as high as $54. That's the price volatility went to as high as $54. But the volatility was not so much strong to sustain the price at that $54. So the price began to drop still within that particular time frame. So if this was a 15-minute time frame, I mean, this candlestick represent all that is happening in the market at that 15-minute time frame. Okay, so still within that 15-minute time frame, as the market went to as high as $54, it now began to come down. Then as it got to $59, that is when the 15-minute time interval or the 30-minute time interval or whatever interval it is got elapsed. So the candle was closed. So you can start we have now gotten a proper candlestick. So a candlestick is not formed. You cannot just define a candlestick when the candlestick has not closed. So before you say, okay, this is a bullish or a bearish candlestick, wait for the close of the candle first. Okay, so you can see that the moment the market closed at $49, that is when we now have the confirmation. Okay, this is a bullish candlestick, because the open is lower than the close. The market was progressing, even though the market went to as low as $41. They still had to regain momentum and go to as high as $54. But the market was the volatility was not strong enough to sustain it at that particular price, so it came down below to $49, and you can see how it closed there. Okay, so the same thing happens with the bearish candle, just the opposite. You can see the open. Of course, the bearish candlesticks when price is falling. So the open is always up. The price opened up, then the price went to as high as $70. It opened at $65. It now went to as high as $70, as if it was going to pump. But what happened next? The price began to drop still within that particular time frame. The price began to drop, and it now surpassed even the $65 that it opened. Okay, so as it was dropping, it dropped to as low as $56. But because of the price volatility was not so strong to push the price below that $50, it began to retrace. Then the price now closed at $60. Okay, all those things might look a bit trickish, but then as you begin to interact with the market, you definitely understand what I'm trying to. Okay, so listen to the watch the video again so you can have better understanding about the anatomy and the types of candlestick. Okay, like I said, we have the bearish and the bullish candlesticks. Okay, so these candlesticks can be represented by any color. The thing is you just need to have an idea of how this thing forms, have an idea of the high, the low, the close, and the open. Okay, so let's go to the next slide. Okay, candlestick formations and arrangement. Okay, now I know that the moment somebody sees the chart, you think maybe these candlesticks are haphazardly arranged. No, they are not haphazardly arranged. Let me give you an instance now. You know a relay race, okay, whereby there's a group of 4 team members, and then they're trying to run maybe an 800 meters race. Okay, so each of them will now run probably to 200 or 50 meters race. So you agree to that before the next team member is going to run, he must have collected the baton from his member. You cannot start running until your member has handed over the baton to you. So there must be that point of connection. The same thing happens with the candlesticks. Candlesticks do not just form like that. No, there has to be a point of connection. So look at this first candle we have here now. It was a green candle. The markets opened and the market was pumping, and it pumped to a specific price. Now, the moment the next candle want to form, look at it did not form. It did not start forming anyhow. Look, there was a connection. And what is that connection? The close of the previous candle was the open of the next candle. You can see the connection there. It's more like that was the point that they interchange baton, just like how I did in the relay race. So before the next candle would start to form, it must have first of all collected that baton. So you can see that the moment the price collected the baton, what happened? It began to run, and then it gets to a particular price. So as it was closing, the next candlestick began formation. So whenever somebody asks you that, come on, I'm going to give you guys test. When I will just draw some fake candlestick formation and ask you to identify the correct ones. Some people make that mistake, yes, at the initial stage, but along the line, you're definitely going to get a better understanding of how this thing works. Okay, so you can see also the red one too. That's the first red candle we are seeing there. Because at the moment the green candle has formed finish, the close of the green candle was the open of the red candle. Remember, the open of red candles or the open of bearish candles are always what at the top, because the thing will open up and then to go down. You can see that the moment the candlestick open, that's after he collected the button from the green candle. Because of it's the bearish candle, you can see how it started falling. From the open, price went down. And you can see again, even the next red candlestick that was formed, that is the fifth candle. The fifth is that is the smallest red candle there. You can see that before the candle began to form, it collected the button from the previous red candle. Okay, so these are things that you're definitely going to understand as you interact with the market. Okay, I don't expect you to just get it all of a sudden like that, but then the more you interact with the market, the more you understand how they're not difficult to understand. Okay, it's just something that the more you give it time, you're definitely going to have an understanding about it. Okay, so this is just the formation and arrangement of candlestick. Like I said, they are not haphazardly arranged. There's always a connection. On very few occasions, there might not be a connection when the price volatility is so massive. That's what we call a jump. But those ones you rarely see them on the chart. Okay, so allow those ones to pass by and have this at the back of your mind. All right, so let's go to the next slide. Features of a candlestick. Okay, like a feature means the characteristics of the candlestick. Okay, now these features help describe the strength and weakness of a particular candlestick. Now, mind you, we say the candlestick shows us the price volatility. So if volatility can be strong or high, the volatility can be much. So there are certain features that can help you know when the volatility within a specific time frame is high or not. Okay, and that is where the features of a candlestick comes into play. And when you come to look at the features of a candlestick, you need to first of all consider the size of the body. There's the size of the body. How big is the body? The size of the wick. How long is the wick? There's either the low wick or the high wick. How long it is. Then the shape of the candlesticks. Okay, I'm going to show you guys pictorial illustrations of each of these things. Okay, and then a combination. Okay, candlesticks can come in combination, and then they're going to form a specific pattern. So all of these things sum up to be the features of the candlesticks. Okay, so if you want to look at the candlesticks, you want to now interpret the candlesticks, you must have this at the back of your mind. So aside from just looking at the candlestick, knowing the close and the open, you need to look at the size of the body, the wick, and stuff like that. Okay, so this is how you should be able to know what the strength of a particular candlestick. Okay, so let's go and see more illustration. Okay, so when I say the size of the body of the candlestick, you can see here, you can see from A, B, C, D. That is this is the bullish candle, and the bullish candlesticks. You'd agree with me that the strength of A is not the same thing as the strength of B. In fact, for these candles, right, the strongest is what is candle A. That is for the bullish candles because it's the biggest. Price volatility is massive. Okay, so you can see how the volatility reducing as the price goes to D. Now looking from E, F, G, H, right? This is the bearish candlesticks. Okay, so based on your understanding of candlesticks, now you're going to understand that the volatility of these red candlesticks is different. So it's not as it's still the same thing. The H candlestick has more volatility because the price dump massively. That is why it is big. The size of the candlestick, the size of the body of the candlestick. So the bigger the size of the candlestick, the more volatility it has. So you need to have that at the back of your mind. Okay. So let's go to the next one, and the size of the wick. Okay, so you can look at this one now from A, B, C, D. You can see how the wick is long, is reducing. Okay, so the longer the size of the wick, there's a meaning attached to it. Okay, so when the wick, for example, you see this one that has A, B, C, D, right? The longer the wick means what? The candlestick is weak. Don't worry, I'm going to send you guys an ebook that's going to help you guys understand this very well, right? If I don't send the ebook, kindly remind me so you're going to get access to that ebook. These are things that the moment you read this book, you're going to understand the psychology behind the formation of these candlesticks. So the wick of the candlestick also describes the strength of that candlesticks. So either the bullish or the bearish candlesticks can have wicks too. So just factor them. And of course, look at this illustration now. There's some certain candlestick that will not have a wick. When the candlestick does not have a wick, know that the price volatility at that particular price, at that particular time frame, or at that particular time is massive when there's no wick at all. For example, look at D. Candlestick D, 1, 5, and H. They don't have wicks. They represent what? High price volatility. Okay, so these are just some of the things that you need to look out for in order for you to understand how these candlesticks operate. Like I said, these things are just like basic knowledge. You may not really, nobody's going to pay you for knowing about these things, okay? But I'm just trying to make sure that you have a solid understanding about candlesticks so you don't go out there and fall my hands. Okay, so let's go to the next slide now. A combination, okay, like I said, another thing that describes the strength of a candlestick is the combination at which these candlesticks come. So you can see this candlestick can come in one combination. You can see the different shapes. Okay, I think this is shape. Okay, you can see the different shapes. Okay, this is like more like shape and combination. Okay, you can see the first row. We have different shapes, different shape. You can see the combination. Candlestick can come in twos, can come in threes, and when it comes in twos and threes, that's when we begin to talk about what candlestick patterns. Okay, so as we progress in this course, I'm definitely going to introduce you guys to candlestick patterns so you can learn how to take advantage of these candlesticks when they come in a combination. Okay, so this brings us to the end of this session. Okay, I trust you got value. If you want to get more on candlesticks, I'll recommend you to this website on the screen. That is www.firepips.com. Okay, and the moment you go on this particular website, you're definitely going to have simplified understanding of how this concept work. Okay, so see you guys on the next video. All right, so bye.